Last week, federal government announced their budget for 2024-2025, and in that budget, one of the major announcements was to increase the capital gains inclusion rate from 50% to 66%. And since that announcement, there has been a clear divide amongst the economist community as well as on the social media platform that everybody is debating about that. And there is a clear divide that some people think this is good, some people think it's bad move, and this issue is being polarized as well, between the liberal and the conservative party. So I waited for a week before I made this video because I wanted to understand the overall implications upon Canadians and our future generations in terms of the new tax implications, because this is not looking good, guys. Okay, I'll break this down in this video for you so you understand the implications, which is much deeper than it is being told in the financial media. So let's understand what's happening. So what is capital gains tax? Basically, it's a tax applied upon the profit of selling an asset. When you sell an investment property, when you sell an asset like stock or security like bonds or cryptocurrency, or sell any business, these are assets. When you sell that, you take profit. So the government tax you on that profit. Now, up until now, the tax rate for capital gains was 50%. That means, for example, when you make 100 grand profit upon selling any of these assets, the government will apply tax on the 50% of that profit. So you made 100 grand profit, the government will apply tax rate upon 50%, which is 50,000 of your total profit. So now this is changing. So rather than 50%, you have to pay tax on the 66% of the total profit. Now this is the half story that is being told in the financial media. The way the government is selling this narrative to you is, don't worry guys, this is only impacting 0.13% of the Canadians. The greedy capitalists, the super rich who are making a lot of money, we're gonna tax them. That's the story that they're telling you, but that's not entirely true. There is a limit, there is a threshold that individual can take advantage of this. So if the individual is only making less than $250,000 profit, then this inclusion rate will not impact them. Any individual who is making more than $250,000 profit, then they have to pay 66% capital gains inclusion rate after June 25th. Now, this is again the half of the story. The full story is any personal corporations like plumbers, doctors, realtors, anybody who is running a solopreneur business, anybody who is incorporating their business, they are excluded from this threshold. Okay, so pushback that we're seeing from the doctors is the doctors, most of them are incorporated. So they create a corporation, they run their medical practice under that corporation. So whatever the revenue that they collect, that is considered a business income under the corporation, and they only take the minimum salary that they need for their personal finances. The rest is invested back into the business in terms of stock, securities, or whatever you need to grow the business in terms of its equity. Do you know why? Because decades ago, the government told doctors that, hey, rather than increasing your doctor fee, why don't you incorporate your practice? That way you will save money on taxes. This was the narrative sold to doctors years ago, and they followed that. And now, after years, after those decades, the government is turning their back and saying, no. Whatever you have invested, when you sell, we're going to tax you more because you are making a lot of money, Mr. Doctors. That's why the doctors are super pissed. Okay, now you understand why this is happening. And I'll tell you another reason why this is happening. Because the reason why we're seeing a lot of tax hikes, carbon tax, rain tax is being discussed, this capital gains inclusion tax, all of these taxes are coming because the government is running massive fiscal deficit. In my previous videos, I have been talking about this. The federal government is running massive fiscal deficit. The current projections is around $40 billion of new borrowing that they're going to take on to cover the expenses. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property. a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. And the interest payment, and hear me out, the interest payment on that debt that the government has is more than that we pay on childcare. And it is as high as we pay for the entire healthcare budget. That's how ridiculous the debt situation is in this country. So the government is so inefficient. They're running massive fiscal deficit. They're taking a lot of debt, a lot of borrowing in order to compensate this fiscal spending. And that debt, that borrowing, has to be paid by somebody. Who is somebody? It's you and your kids. Your future generations will be paying in terms of new taxes. The reason why we're seeing these taxes going up is because the government is getting bigger and bigger. A lot of new jobs being added only in the government sector. Okay, so the government is getting bigger and bigger and bigger. They're taking a lot of debt to basically sustain themselves. They're not creating any productivity in the economy. They're actually the drag on the economy. And to cover up that expenses, that fiscal spending, they have to increase taxes. So you and your future generation, including myself, are going to pay for that fiscal deficit, that debt that they're taking on in terms of new taxes. So the situation is not going to get better, guys. So the situation is only going to get better, guys, if the government stop spending money. The fiscal spending should be stopped. They should only spend what they collect. Okay, that starts with the cutbacks. That starts with the austerity. Whoever takes the government, they will have to take these measures to bring the economy back on the track. So you're seeing a pushback coming in from the doctors, but actually it is impacting every single small medium enterprise, because small medium businesses are incorporated the way they collect revenue, they invest back into the business in anticipation that someday when they sell this business, they will retire comfortably. Okay, now the government is taxing them at a higher rate, which is screwing their retirement plans. And you tell me whether this is fair or not, because the government is selling this narrative that this is a fair budget for every generation. I'll let you be the judge. Put your comments down below. Let me know what you think about it. And if you like this video, then give me a thumbs up, subscribe, and put your comments down below. Let me know what you think about it. I love this engagement. I love your feedback. That helps me to improve myself. Okay, if I say something incorrect, let me know in the comment section, and I will appreciate your engagement. And check the links down below for the free stock and other investment ideas I put into the video description. Until next time, take care.